Welcome. This is Tax Pro Nation, the home of the independent tax professionals, where you can find a tax community, maximize your earnings, and live life on your own terms. I'm your host, Imelda Ledesma, COO of Pronto Tax School. This is our last episode on Schedule C. Next season, we will cover Schedule E. In this episode, Andy and Andrea will cover when and how to move your clients off of Schedule C to an Scorp.
So the topic that we were going to address today, let me take a quick look at it, was the what to do when your Schedule C clients can't pay their taxes. When I was thinking about this this week, I believe we actually covered a lot of this already in a previous session. That being said, if you're showing up today to with specific questions about that topic, let's go ahead and just ask your questions now, and we can make sure we address that. We did address installment agreements and calculating payments agreements and stuff pretty thoroughly. We had a lot of interest, Andrea, on the last session about helping clients go from a Schedule C to an S corporation tax treatment.
Okay.
So if you guys are good with this, I was going to kind of, go a little bit further into that and then give you guys a new little template that we're building. But that being said, if you're showing up to ask specific questions or learn about what to do for clients who can't pay, now's the time to speak up. Let's see. Okay, cool. And feel free to interrupt as we go if you have specific questions, because I know we had advertised that as the topic. So last session, Andrea, we talked about how, one of really the primary tax reduction techniques for Schedule C clients is to move off of Schedule C, and how that's like such a key part of not losing your clients that start earning more of a higher profit on Schedule C. Also acquiring other like high value clients that are, just can be great clients, but also fee wise, $2,000 to $20,000 type of number. So there was a lot of interest around that and a lot of really great questions on the session. I wanted to see for this session if we could actually deliver to people a kind of like a checklist of what does this actually look like in real life to do this. And I had built a checklist before, like when I was doing a lot of these, but it kind of needs to be updated. So I have a checklist that's already kind of ready, but I was hoping, Andrea, we could kind of go through, get your perspective on stuff. And also people will be able to customize this, based on how you want your actual service delivery to go. Like some people were talking, Andrea, they want to do the monthly accounting and they want to do the payroll, versus some people don't. So you guys will be able to kind of customize this. And so how does that sound as an overall plan?
Sounds great. Let's dig in.
Okay. So let me share my screen and I'll show you kind of where I'm at right now. With updating this checklist. And so if we pull back for a second and just imagine, this is a Schedule C client that is doing well, right? In terms of they're having a net profit, maybe they're growing their business, you see potential in their business. It's that kind of client that's, their business is, going pretty well and they're looking for a way to reduce their taxes. Okay. So that's the overall big picture thing. So in terms of what to actually do when you see that situation, or even how to find those situations and turn them into business opportunities for ourselves, I'm going to kind of read off the steps that we would use previously. And then just kind of give me your thoughts, Andrea, or anybody else on this. So what we would do is segment the client database to identify suitable clients. So we would run a search on the database for any Schedule C business owners that have over 50,000 of net income. There was some talk about what level of net income or gross income would be considered like a suitable potential client. Any thoughts on that? For the people that wanted to they'll even want to segment their database today to see if they have some of these opportunities waiting for them. How do you see that?
Yeah, I mean, generally So for me, it depends a little bit what services the client already has. So for example, if it was somebody who was not yet paying for bookkeeping and who wasn't paying for any additional tax planning, and they were at $50,000 of net income, they would be on the very low end of what I would bother to start running a comparison, because they're going to be incurring a bunch of additional costs. Whereas if this was a Schedule C client that was at $50,000 of net income, but they're already paying for bookkeeping as well, then that's a little bit easier because they have less new costs to factor into the comparison. But $50K is a reasonable place to start, especially if you're trying to get really good at doing that LLC to S Corp comparison. The more of those worksheets you complete, the better you're going to get at it. But below $50K, I probably wouldn't even waste my time. And remember, this is net income, not gross income. That's a big difference. At $50K gross, yeah, I won't even consider it.
Yep. So I love that point about whether they're already paying for bookkeeping already, because that it's kind of like when you go to an S corporation, part of that is making the commitment to do more of a serious accounting, right? And is that fair to say that?
Yeah, and we won't take on any S Corp clients that don't work with a professional bookkeeper. Doesn't necessarily have to be us, but they have to work with a professional bookkeeper. And even then, if we're not doing the books, we require those clients to let us complete a quarterly review of the books to make sure that we don't have any questions, so that we don't end up in a bind during tax season.
Interesting. Okay. And so, gosh, I wish I would have known that many, many years ago. Is that something that you would, you think that you and your firm are maybe just a little more strict than most firms, or is that like something that you feel like everybody should be kind of drawing somewhat of a hard line on that?
So we haven't historically drawn that hard of a line. This last tax season was the one where I'm like, okay, I've been saying we're going to do this, and then we've been loosey-goosey about it, but now we require it. So all of our clients are getting a review of their agreements, and in June, all new agreements are going out, and everyone who insists on doing their own bookkeeping without paying us to do a quarterly review are going to be released as clients. I won't even touch their returns anymore because I don't want that stress during tax season ever again. So from here forward, we're taking a very hard line on it, and it's something that I would encourage anyone who is setting up a business that serves business clients. It's a move I suggest you consider making. As an alternative, what some professionals that I know are doing, rather than requiring a quarterly review, they do require that the clients use their specific template. And I think we talked about this in our last session, last week. So you have to use my spreadsheet. That way, at least I understand how the data is organized. But for me, that's not enough of a step, just because tax season is so stressful already. And even with extensions, we don't want extensions taking until September. So it's a relatively short period of time to get returns done. And so we just don't want to deal with the questions anymore. So we will not be keeping any clients, nor will we be accepting any clients who don't allow us to do at least a quarterly review.
Yeah, and it's interesting to think about because business clients is such a big category, and there's so many different variations. You know, like is somebody doing freelancing and making $5,000 a year a business client? Well, obviously they're not a business client in the same sense as somebody, a company making $10 million a year. But like for us and for the members on the call, the transition to the S corporation tax return, because of the balance sheet requirement, which is, as we know and we've talked about more or less endlessly on these sessions, is like the major problem that people run into. So if there's no real bookkeeping going on and you're moving to an S corporation, it's pretty much setting yourself up and the client up for a lot of problems. So maybe that's a line where, you know, people, each business owner could kind of draw that maybe for themselves, depending where they are in their business. I know for some people, they're just starting out. I know when I was just starting to get more clients, I would be much more open to taking clients of any variety, you know, than later on in my career. So, but with the S corporation, I really love the points that you made on that. Let me, as we go through here, guys, let me give you in the chat the draft document, just in case you guys want to be kind of like customizing this for yourself as we go. Oh, you know what? I can't do that because it's a Word document. Sorry, Zoom doesn't let me do Word documents, but I'll give you this as a Word document in the recording, because I do think it'd be really good for people to customize it for themselves. So the second step that I had, and let me know too, Andrea, if you feel like I'm like missing steps or steps are just not required, was, so we would segment the client database, use the magic spreadsheet, the like simplified spreadsheet that we've provided to all the members to estimate the potential savings from going from Schedule C to an S Corp, and just kind of rough ballpark it. Then at that point, you would kind of see, okay, is it worth reaching out to the client or bringing this to the client's attention?
Yeah, agree.
Before we would actually bring it to the client's attention, we would like to drill into the situation a little bit more beyond just a simple spreadsheet to make sure that if everything goes as planned, which it obviously doesn't always do so, but that the potential tax savings would actually materialize. So for example, maybe like running a scenario in the tax planning software or in the tax software itself, because the spouse may have a higher income, or the business may have variable income. Like one year they would save a lot, but another year they would have saved nothing. So just kind of drilling into it a little bit more. Is there any particular tool that you would use or recommend to do a little bit more drilling into? Do you use like Drake has a tax projection software? How would you do that little drilling further into?
Yeah, so historically, I've used Drake, and Drake has that tax planner. So I would use the tax planner tool and take their most recently filed return. So in this case, it would be their 2023 return. And I would basically update it as if the business had been an S corporation instead of a Schedule C, to see what the impact is based on their actual numbers. Now, like you pointed out, some years are different than others, so that's not necessarily an indicator of what 2024 will look like, but at least gives you a good idea. So when you head into that meeting with the client, you can say, hey, if you had been an S corporation in 23, you might have saved around $7,500 in taxes. So this is definitely worth us exploring. Now let's talk about what you expect to have happen in your business in 2024. What about 2025? Are you growing? Are you trying to stay right where you are? Like that's your lead in with what you think their tax savings might be. And you don't want to give them exact numbers, of course, but it piques their interest. And then you need to continue the discussion, because remember, this S Corp decision should not be made in a vacuum. It should not be made looking only at 1 year, because this is a decision that's going to affect their business for years to come. But that is a great place to start. So the spreadsheet, and you're like, all right, there's some tax savings here. This is worth me spending a minute digging in a little deeper. And then I use that tax software to, and if your tax software doesn't have a planner, you can really do this in Excel, right? You know what their total income is. You know what their, itemized or standard deductions were. You can recreate the 1040, just swap out, instead of Schedule C, move it to Schedule E, add some money for payroll in the wages line, right? Like you'll have to do a little tweaking, but you could easily do it in Excel.
Yeah, and you mentioned, so the next step I had here on my checklist was and even that, so that step that you just mentioned, I think it's a lot about the confidence that you have. So when you approach the business owner with the idea, you don't want to waste the person's time, and you want to feel confident that any savings that you pique their interest with are actually going to be, available, assuming their situation is relatively the same. And with taxes, as we know, there's all different things of, that can change things that sometimes can't be reflected in like a simplified spreadsheet, like the magic spreadsheet. So thanks for the suggestions on that. Now, would you have a step here? Because the step you just mentioned is kind of that discussion with the business owner, right? Benefits and costs, and maybe general process of what's involved. Would you have a step before that of like that piquing the person's interest, of just generally like sending them, hey, I've looked at your situation, think possibly we could save you XYZ? Do you think that's a step that should be in here?
Yeah, that's usually what I do to get the business owner to a meeting. So like, hey, now that we're past tax season, I had a minute to really sit down and dig into your situation a little more. I think I might have found a few ways that we could save you some taxes going forward that might really make sense for you. Let's hop on a meeting to talk about it. Kind of like a little teaser to get them interested in actually meeting with you. And how you do that can be up to you. You could put all of that in an email to the client, right? Like, hey, I think, if we did this, it might save you $7,500, but I don't like to show all my cards up front. I want to wow them while we're on a meeting, or at least on a phone call together, so they can hear my excitement. That excitement doesn't translate in an email, no matter how many exclamation points you use. So I do usually a little teaser, like, hey, I think we might have something here. Here's a link. Let's get on my calendar and talk about it. And then in that meeting, we get into a little more of the nitty gritty. You still never want to promise specific savings, right? You're like, hey, 2023, it looks like it might have been about $5,000. We should really look at this for you for 2024. Let's talk through what that looks like.
Okay, so then setting up a meeting, and you would prefer to do that on Zoom, phone call, either or in person. How would you like to do that?
I 1,000% hate phone calls. I just hate them. I don't ever want to pick up my phone and talk to anyone ever again if I can avoid it. Nice. I like to we use Google Meet, but Zoom. I like to do live virtual meetings. For me, it kind of bridges the gap, right? It's a nice happy medium between a phone call and a live meeting. You can read body language. Clients can read my body language where I'm like, this is amazing. Like, there'll be some extra steps, but I really think it'll be worth it. Right? Like, it just allows you to deliver. And you can say all that. They can hear it in your voice on a phone call. So if you prefer phone calls, this could be one that you skip that email step and you just pick up the phone and call the client. You're like, hey, I was really excited. I just ran the numbers and I had to call you right away. That helps get the client excited because they're like, wow, this was so amazing. She wanted to call me right now without even waiting. So it really depends on your comfort. I do prefer live virtual meetings typically.
Yeah, you're
awkward on the phone.
So that may be something that people want to customize. That some people I know do prefer phone calls or feel like their clients prefer phone calls. I'm kind of more in your camp where I would prefer to avoid phone calls, but I think depending on how you like to do things, there'd be different ways to do it. And so however you're doing it, whether it's in person, virtual meeting, phone call, you're going to have a discussion with the business owner, just like you just said, about the benefits and costs, and how deep would you go into describing the process of what you have in mind?
I don't really, because at this point they haven't paid me for any extra work, right? Like, when you think about it, the Scorp analysis sounds easy to us. That is a whole entire tax planning service. So as we're thinking about our packages and as we're thinking about how we charge our clients and as we're thinking about ways to upsell our services, you don't want to give away all the secrets. On that live meeting, I'm going to tease it in my email saying, hey, I think I might have an idea for you. On that live meeting, I'm probably not going to go into a whole lot of detail other than to say that I've identified a couple of ways that we could have saved you, around X number of dollars in taxes last year. I really think that we should talk about it for this year. Let's talk about what you think your income is going to be in your business. I dig into a little more detail, and then I can take that back and run a projection based on 24 and say, hey, client, I think we really do have something here. Here's the savings I'm projecting for you for 24. I would love to implement this for you. That's going to be $1,500, whatever fee I want to put on it.
As opposed to giving the person so here's all the steps that would be involved, and then giving them all that kind of Googling ability of okay, let me search how to convert to an S corporation. It's more just this is the plan to save you this much. And it's a trust-based scenario that I've already built the trust with you to kind of earn the ability to not have to explain everything in technical detail. So you would keep it then fairly vague, really.
Until they've paid me, yes.
Until they paid you, okay.
They've paid me for this tax plan, whatever you want to call it, but it really is a tax plan, right? Because you're coming up with a plan and then you're going to show them how to implement it. Once I come up with a plan, they've agreed to work with me, they've paid me, then we're going to have a meeting where we get into all the nuts and the bolts. Then, because they should be able to know, right? They're going to know that what I'm proposing is S corporation status. Here's what that includes. Here's what you're going to have to do step by step, all the check boxes of things that you're going to need to take care of for this to work. Here are all the things I'm going to take care of for you. So once I've been paid, then we get into all the nitty gritty and they're going to get all the details.
Gotcha. Okay. I wanted to mention a couple good chat comments here that would be relevant, I think, to people. So Tiffany said phone calls often lead to more questions. So a lot of phone tag back and forth. And I agree with Andrea about having virtual call live. Sometimes clients don't show video, which is actually fine, but it's more of like a meeting where it's like we had this time together to address all your questions as opposed to starting a game of phone tag. So I think that's a good thing to consider that I think Tiffany's probably learned by experimentation and by experience. And Robin says, I really prefer in-person or phone calls, and I haven't mastered Zoom calls. Then she considers that Zoom calls are awkward. So, I think there's something to be said for that too, because it's, your confidence and your comfort when you're having the conversation, it matters as well. And it's going to come through to the client. So I appreciate the feedback on that topic.
Thank you for joining us. I'm Imelda. Join us next week as we continue to share mini audio clips of the Schedule C tax prep process. If you are interested in listening to the full process and want to be part of the Dream Team community, please visit prontotaxschool.com or email us to support@prontotaxschool.com. Being part of the Dream Team membership comes with getting expert support, top-rated training programs, and weekly video live events. We look forward to having you on board.